Hello and welcome to Hearts of Wheels, How to Finance Your New Car course. Hearts of Wheels, I want a new car but I don't know where to start. Don't worry, we'll guide you through the process step by step. The most important question you'll have to answer yourself is, how will I pay for it? Will you save up a down payment and try to finance the balance, or will you just pay cash? There are 3 questions the salesman will ask. Number 1, how's your credit? Number 2, how do you plan to pay for it? Are you paying by cash or seeking financing for it? Number 3, will you be using your financing institution or do you want to use ours? So, you want to get started on a path to save money and build credit, so you can one day get your bank to finance your car. What's my first step? Your first step would be to create a saving account at either a credit union or bank. Hearts of Wheels, what's the difference between a credit union and a bank? Credit unions offer lower interest rates and high savings rates. They emphasize strong customer service. They may have low or no fee accounts and services for customers. Banks offer a wider range of banking, loan and retirement products. Larger banks offer convenience with access to multiple branches, ATMs, and online and mobile banking technology. As of 2020, the FDIC insures deposits up to $250,000 per depositor as long as the institution is a member firm. It is critical for consumers to confirm if their institution is FDIC insured. Joining will be instrumental in establishing a great credit score, no matter which one you decide on joining. Hearts of Wheels, what is my credit score? A credit score is a numerical expression, sometimes called your FICO score, based on a level analysis of a person's credit files, to represent the creditworthiness of an individual. Your credit score is primarily based on a credit report, information typically sourced from credit bureaus like Experian or TransUnion. So, my FICO score represents my creditworthiness? Yes, your FICO score is a metric that lenders look at to determine whether you're likely to pay them back. Your financial history, including how often you pay bills on time and how much debt you have, appears on your credit report, and that information makes up your credit score. It's a 3-digit number from 300 to 850, and the average score is around 700. The higher your score, the more favorable interest rates you'll get from lenders, making it cheaper to borrow money. A FICO score of 300 to 649 is considered a bad score. How do I build credit? Remember what we said earlier about your credit score and how it's built on your record and the ability to pay off debt? Once you have established an account at your local bank or credit union, you should start saving and apply for a credit card as soon as you are eligible. What's a credit card? Credit cards are a convenient way to make purchases, pay bills, and book travel arrangements. As an added benefit, many credit cards offer cash back, points, or miles on your spending, which can save you money. A credit card can also help with establishing and building a good credit score. Credit card issuers differ in terms of what it takes to be approved. But generally, these factors are considered when you apply for a card. Your credit score. Your income. Your employment. Your monthly rent or mortgage payment. When I opened my bank account, I received a debit card. Is a debit card considered a credit card? They look the same. Credit cards and debit cards typically look almost identical, with 16-digit card numbers, expiration dates, and personal identification number, PIN, codes. Both can make it easy and convenient to make purchases in stores or online, with one key difference. Debit cards allow you to spend money by drawing on funds you have deposited at the bank. Credit cards allow you to borrow money from the card issuer up to a certain limit to purchase items or withdraw cash. A credit card helps build up your credit score and a debit card does not. Hearts of Wheels, what about the financing from the buy here pay here car dealers? The deals from pay weekly car dealers come with some downsides. Sure, it's easier to get approved for financing, but because these dealerships don't run credit checks, you might not get a chance to build or improve your credit if they don't report your loan or on-time payments to the credit bureaus. Pay weekly dealers tend to set their interest rates higher than average, usually in the double digits, and this increases the overall cost of borrowing. In addition, the down payment requirement can be high. Pay weekly dealerships typically base the down payment on the vehicle you choose. This makes it tricky because the requirement varies from dealer to dealer. $100 a week seems like a small number, but when you multiply it by 4, you can quickly see that your car payments are $400 a month. When you add insurance costs to that payment, you'll quickly see that you will need to earn $650 to $700 a month to keep from getting your car repossessed. The only upside to these deals is that they are an avenue for people with bad credit to purchase a car. Wow! My dream car payment is too high. How can I lower it? Lower your car payment by extending your loan term. For car loan terms, a shorter loan term means less interest paid over the life of a loan. However, lengthening your loan term can reduce your car payment every month, sometimes significantly. Buy used instead of new to lower your monthly payment. While the rapid depreciation in new car values is annoying to new car owners, it is good news for used car shoppers. Lower your car payment by trading down. Buy a more economical model. Lower your car payment by purchasing fewer options. Leave off the leather seats on the luxury package. Hearts of Wheels, will my new car be covered under the Lemon Law? The Alabama Lemon Law protects every new vehicle intended primarily for use and operation on public highways, which is self-propelled. Repair intervals and coverage periods are: 3 attempts at repairs or 30 calendar days out of service during the first 12,000 miles or 1 year. The complete text of the Lemon Law can be found at Alabama Code Section 820A1-6. Unfortunately, you only get the warranty that you agree upon when you purchase a used vehicle unless it is still under the manufacturer's original warranty. A car bought as is has no warranty. When purchasing a used car as is, you should have it inspected by a certified mechanic and ask for a 30-day warranty. Lemon laws are different state by state, so please seek the appropriate laws for your state. Buyer's remorse, the 3-day right to cancel a contract. Many consumers believe that the Federal Trade Commission protects auto buyers with a 3-day right to cancel law. Car buyers need to understand that this law does not apply to new automobile transactions. This law only applies to consumer purchases from door-to-door salesmen or at a location other than the seller's place of business. Check with your car dealer. Sometimes car dealers will offer in-house buyer's remorse deals. Make sure you get it in writing before you finish signing your contract. Some dealers have binding arbitration agreements. It is a private process where disputing parties agree that one or several individuals can decide the dispute after receiving evidence and hearing arguments. When arbitration is binding, the decision is final, can be enforced by a court, and can only be appealed on very narrow grounds. If you have a choice between buying from a dealer that has arbitration contracts and one that doesn't, buy from the one that doesn't require arbitration. You'll have a better recourse against legal issues arising from your purchase. Hearts of Wheels, thank you for looking out for me in this process. I have only one remaining question. Now that I have a good credit rating, should I try to get my bank to finance my new car, or should I use the dealership financing? Typically, you should use your bank when you can. In many cases, you are more likely to get a better interest rate, and they may be more lenient when you're having trouble making a payment.